Longest minute ever. Okay, here we go. Hey folks, Cam Hawkins here from Trading Nut. Welcome to this very different kind of thing here we're doing on the Trading Nut channel. I've got Cass Daamen in the house. How's it going, Cass?
Hi guys, I'm doing good. Yeah, busy times, but really excited for this new thing on Trading Nut.
So as you can see, it's a pre-market analysis, including key levels. So Cass is going to be basically breaking down the Forex and gold market, and even I think you said silver and maybe a couple of other things as well,
Yep.
over the past week, and looking at the key levels going forward into the next week for you guys to be able to have something you can use, tangible levels that you can go into the week knowing. And even I think you're going to be sharing some other things which we'll talk about in your little presentation. I won't ruin it for you. But guys, this is a free trial of what Cass is putting together here, which is going to be quite valuable because it's going to be a weekly thing. And if you do want to, at the end of this, if you think this is going to help my trading, this is really something that I think I can get value from, then it is going to be a paid service at the end. So you guys can actually join that on the Trading Nut channel, which I'll show you here in this presentation. So you can find the link below the video, click on it. You'll see here it's got this pre-market custom and it's got US 24.99. That's how much it is a month, and you're going to get access to 4 sessions. So every single week you'll be basically prepped, and you're going to see what that looks like today with Cass here, giving you guys a free sample. Now, Cass, I've probably screwed up your name there about 3 times. Do you want to let the guys know how to pronounce it, and then we'll get you to share your screen?
Yeah, sure. So in Dutch, it's Kas Daamen, but in every country, everyone says it differently. So that's fine.
Cool. All right. Well, let's get you sharing your screen, and let's get on with it. So this is going to be what this thing is going to look like going forward, guys. So over to you, Cass.
Yeah, so the main purpose of these live sessions is pre-market analysis. So just like Cam said, I'm going to look at the most important levels for the next week and also review some important levels from the previous week. And then again, I want to share a trading tip that you can use to improve your trading performance. So every single week you get one tip that you can immediately use to become a better trader. And you also get the ability to ask all your questions. So you get a bit of coaching there every single week. So let's dive into the presentation right now. First, of course, the risk disclaimer. We are not financial advisors. I'll give you a few seconds to read it, and then I'm getting started. All right, so let's start off with the tip of this week. And the tip of this week is liquidity tends to work like a magnet. Analyze liquidity to find key levels. Now, most of the people in TradingNet I've noticed use some type of smart money approach to trading. It's become very popular, and the concept of liquidity might be already clear to you, but to give it a bit more explanation for the people that aren't familiar, liquidity basically means the ability for a market to be traded. So markets that are highly liquid are easier to trade. In Forex, the market is very liquid, which means if you press a buy button at any certain price, you usually get an immediate fill. However, there are markets out there where this is not the case, because you have to think about if you want to buy, someone has to be selling to you at that exact same price. And if that's not the case, you will be buying at a higher price because people might be selling there. This concept is something I use in trading, and that's very important because for us retail traders, it's not that important. We can buy anytime, but bigger players in the market, and then I'm talking about really, really big players, they can't trade like we can. They just can't buy and get a fill and that's it. They usually have to trade at areas of high liquidity, and they usually have to scale in their position. So they basically have to divide their big order into smaller portions to get an efficient fill. Because let's say they want to buy 10,000 lots long at a certain price level, but no one is selling 10,000 lots there, and maybe only 5,000. That means only half of the order gets filled at that price, and the other half gets filled at a higher price. And that causes an immediate drawdown, which you definitely want to prevent, and especially if you're trading big size. Now, 10,000 lots is not really that big, but you get the point. This is the idea behind it. And if you look at charts, you can basically analyze where there is most likely going to be a lot of liquidity. And then you can look at how price reacts once liquidity gets hit. So once that area gets hit, and you usually get very nice trading ideas of that area. So the way it tends to work like a magnet is that usually markets move from one area of liquidity either gets absorbed there, and then it moves to the next area of liquidity. So you can use it as entry places, but as well as targets. We're going to go to the charts right now, and there you will see it way more clearer because I've written down and I've noted down all the levels that I think are important, and it also works around this concept. So let's go to the charts right now. There we go. All right, so this is the euro dollar chart, and most people trade this pair. I've highlighted the key levels on the daily time frame. Of course, we're going to the lower time frames, but I usually start at the daily time frame. Bit of a disclaimer, the way you can use these levels is up to you. I'm a mechanical trader, so I wait for my mechanical setup to happen around these areas because I found that they increase my win rate and my performance. Having an edge in your setup is a great thing to have, but usually it's the location that increases the edge and the context around it. And if you look for your setup at the right areas, 9 out of 10 times you will find that you can increase your performance. So that's another quick tip there. So let's look at these daily levels in the euro dollar. I always start at the daily time frame. This is my main time frame. And you can use these levels basically as a guideline for the coming week. And the levels I've highlighted are important levels of liquidity. Liquidity can usually be found below important swing lows, below ranges, above important swing highs, and above ranges. This is usually where you will find it. Also double tops, double bottoms. These are the most important areas to look at. So if we look at this first level, and I know it's far away from current market price, but this is an important swing point. And why? Because this caused this move to the downside. Here we have another one. This caused this move. This area created this up move. This low is almost a double bottom, and it moved to the upside sharply after this area. So these are the key levels of liquidity on the daily time frame. I've also marked out this blue box. Why is that? If I zoom out, you have to think about how markets work, and you usually get some ranging, a breakout, and a retest of the range. This is usually how a market works. This little area here is the last bit of structure before the breakout of this entire range happens. And you will find usually that markets tend to retest those areas before going up. So that's why I also marked that one in. Again, it's a bit far away from price, but it's a key level, and that's what it's all about. Now, if we look at recent price in the euro dollar, as you can see, we tagged this swing low, which is an important one, but we didn't break it. So you can expect liquidity to be below here. Why? Because people that bought anywhere in this area will have the stops below this level. It's a key support point, and this is usually how people trade. Also, a lot of people think, oh, this is just retail traders, but this is also hedge funds that put their stop losses at these obvious places. And how do I know that? Because not in Forex, but in other markets, you can look at the order book and you can see sometimes that there is massive selling through a swing low. So at support, people are massively going short, and that's not just a retail trader. These are also bigger guys that put the stop losses there. And these guys, and we as well, create this liquidity. So people that are long usually put the stop losses below key levels, swing points, support. And also people that, let's say, price goes through this area, people might be saying, all right, I'm going short at the retest, I'm shorting the breakout. So you can expect a lot of selling below such key areas, below market. And then what I always look for at these levels, and what you can do as well, is see how price reacts. So that's always the key thing about all the levels I'm going to talk about in this session, is how is price going to react. Usually if I get, so if there's levels below market, I look for a fake breakout. So I want to see a break below to trigger selling. So you get a lot of selling down here, but then I want to see a quick move to the upside and closing back above the level. Now, why is that? If there is a lot of selling and the market can't go down and violently moves up, you know there's something up there. And these moves are created by bigger players, a retail trader or any other smaller institution. These guys can't create these big moves. It's really about the bigger player. And if you think back about the first tip I gave about how bigger players need to position at areas of liquidity, if there is a lot of selling here, they can buy and use that sell side liquidity to fill their orders. So I want to see a big move, a strong move up, a bit like this. And if I see that at this particular area, the same goes for the level below here. That's usually a very, very bullish sign. And if I see that on a daily time frame, I use it as a bias to go short or long in this instance. And you can look on the lower time frames to find an entry and build your strategy around that. But these are the key levels where you want to look for these setups. Same with the level above market. If you get something like this, and this area breaks and you get a clean break back below the range, you can usually go to the lower time frames and find an entry. Again, we're going over all that later in this session. So these are the key areas on a daily time frame. So let's zoom into the hourly now. You can see we have had a bit of ranging there and then a strong move up. Now, because of this area below market that I highlighted on a daily time frame that hasn't been broken yet, it's like a perfect touch and it just didn't break. I still am not looking for longs because there is liquidity resting below market. So what I would like to see is the market coming up potentially to this area, because this is the last bit of structure before the aggressive fall to the downside. And usually when these moves are aggressive, they retrace quite a bit. So that's what we see here. So if we get something like this into this area, I'm not going to be short, but this is what I expect. I expect a fall down to here. And then if we get a false breakout of that big level below market, that white level, and we get basically a V formation, that will definitely give me a bullish bias. And then you can look for either a break of a structure to enter long and target the next area of structure, which currently is this area, but markets change. So it is quite hard to explain, but if this happens at that area, definitely looking for longs. Right. So that is it for the euro dollar. No positions yet, nothing interesting yet, but we know what to look for right now. And we know that a V-shaped return at this area is definitely a cue to go long. Let's say it doesn't happen there and the market closes below. This area is the next area. Same thing. If we get something like this, I'm going to have a long bias and look for buys in the euro dollar to target the next area of structure, which is, of course, this level. So if I would be getting long here, this would be the target. You always, at least that's from my experience, you always want to trade from one area to the next one. And people will be like, do I leave any money on the table if I do it like that? Sometimes, of course, but why do you want to gamble and hope this important level breaks? Because it's a significant level to the markets. So usually the approach I take is take profits here, and then if you get a clean break above it, you can look for a retest and then put in another trade to the next key area that you've highlighted. But that's the approach I would take on the euro dollar right now. Let's go to the next pair. And also, if you want to see more pairs, because last week we ran a poll in the chat where you could vote for the pair you want to see. If there are still pairs that you don't see this session, leave a comment down below or ask a question and we will take note of it. All right, so the GBP USD, also a pair that's heavily traded. I've marked out the key levels again on the daily time frame. And what's very important is this piece of price action. This is exactly what I want to see at the euro dollar. We had two equal lows, just like we had in the euro dollar on the daily. Price ran into it aggressively and then quickly rejected and closes above. As soon as you see this at those type of levels, you have a bullish bias. It's that simple. Liquidity has been absorbed. People that have been selling the breakout, they got screwed over. And you definitely want to join the bigger guy that used these sellers to go long. So with that aside, I have a bullish bias on the GBP USD. One concept I quickly want to explain is that if you get a false breakout at one side of the range, usually the market goes to the other side of the range. And that's also because of liquidity. So liquidity has been absorbed here. The next main area of liquidity is here and here, the top of the range. So these areas work like magnets, like I said earlier, and these are the interesting areas to target then. So with that aside, let's look at a bit more of recent price action. So we have a bullish bias in mind. Let's look at the important swing points above markets. This is quite a key swing point. This created this move to the downside. And as you can see over here, we got up to that level, but again, we just didn't break it and we closed a bit low. So you can expect liquidity be up here. Again, people that sold anywhere in this area have the stops above here and people want to buy a breakout. So let's say price goes up, they want to look for a breakout and they buy, and that's where a lot of liquidity is. So that's the next important area. Remember, we have a bullish bias. So I expect price the coming weeks to definitely break this area and target the upper part of the range because of this false break at the downside. It doesn't mean that we can't get a nice trade of this area because of the liquidity there. Now, I don't expect a large move, but if we get something like this and then a quick fall back into the range, that can highlight a possible short to the next key area. And again, this level I'm drawing in here, that's the key area right now to target. But as price action develops, there can be next levels to develop. So that's something to keep in mind when you're placing your targets. Also depends on your own strategy, but this is definitely a key level. Now, because I have a bullish bias, I expect this to happen, but I want to look for longs because of this false breakout and the upside of the range that hasn't been broken yet. So I will be looking for longs as soon as we've had this kind of fake move, retracement, and then a clean break and close above that area. That would definitely have me looking for longs. So anywhere in this area, I would be looking for longs, targeting this swing high. And again, it depends on your strategy, how you're going to attack the markets at this key area. I usually wait for something like this to happen, close above structure, and then go long. Totally depends on you, but this is definitely what I will be looking for to happen. So I expect a bit of a stitch up there just because of the liquidity there. Basically the same thing as here, double bottom, fake out. Here we have the double top, so you can expect a bit of a move like this. But because of this massive level at the top of the range, and because usually if there is a false break at the lower end, price moves up to the upside, I will be looking for longs on this. If I go to the hourly time frame, I don't think there's anything clear there yet. No, there's nothing really standing out to me at this point. Also, the key levels I'm drawing in on the daily time frame, the same goes for hourly important swing points and ranges. So if you are an intraday trader, you definitely want to look at these areas also on the hourly time frame. For example, here, this is a key swing high. This created this move down. And as you can see, as soon as it breaks, we get a fall down because this is where most likely liquidity will be. Same goes for ranges on the lower time frame. So that's something you can use as well. But if we look at more recent price action, I don't see anything there yet. So let's dive into the next pair. USD Swishy is kind of the inverted version of the euro dollar. Kind of, I say, because correlations change. Again, key levels on the daily time frame are highlighted here. And if we look at recent price action, look at this. This was a decent swing point. Market dropped from there. Look at what happened. We broke it, closed below, bit of ranging, and again a fall down because this is where liquidity was. Key swing point to the market, and that's what happens. And it happens time and time again. Same goes for here. We got this swing low. Market just breaks it, closes above, gets a bullish impulse candle. This can give you a long bias and it goes up. So that's exactly what I will be looking for at these levels. Same thing, if that happens over here, I will be looking for longs, targeting potentially this area, but depends on how price action is going to develop. Same goes for here. We got this kind of double tops. So you can expect liquidity to be there. Again, if this happens, I will be looking for shorts. If we look at the hourly time frame at this one, I think there's nothing really clear yet. No, because of the unbroken liquidity at the daily time frame, I don't see anything clear yet on the hourly time frame. I do think this is an important level if you're trading intraday. Why? Again, because of breaking and retesting, and because of this, you can call it open price, but this is a very strong move to the upside, and usually these areas get retraced back to their origin. So you got this ranging action over here, then you got the breakout. Markets tend to retest a breakout area, and they tend to do that at the most recent bit of structure there, which is highlighted by the blue box. So if you're trading intraday, definitely key level to watch. If you get something like this forming there and a break of this structure, you can definitely look for longs, shorter term longs, because I still want to see what happens if this area goes and we get something like that. So that's it for the USD Swishy. Dollar yen. Again, interesting price action this past week. And again, it shows you the strength of these areas. Double top over here. Price breaks it, closes below, and off we go to the downside. So it's absolutely key, in my opinion, to have these levels on your chart, even if you're trading differently, even if you're using indicators or whatever it is, because the locations definitely matter. I've been backtesting a lot the past months to see how I can improve my edge. And I found out that if my setup happens at these key areas, my win rate goes up anywhere between 10 and 15%, which is quite a lot. So definitely worth it to highlight these key levels. So the next level below market is this key swing low. And if we get the same price action that we had here at this area, I will be looking for longs, targeting again that area. Now, as you can see, this is also a decent swing low that hasn't been broken yet. So if those two lows break, generally speaking, you get more liquidity being absorbed and you tend to have a bigger move. Let's go to the hourly time frame, because there are also some important things to highlight here. And we got two equal lows here. This low didn't get broken yet. This low also didn't get broken yet. And then we've got some structure here. So let's zoom in. Let me put in this level on the hourly. So this is a clear accumulation range. And it's basically the start of this entire uptrend. What I do expect, if this low goes and we don't get a setup there, so we don't get a sharp V we're looking for, I think, let me zoom it in. This would be also a very nice play. If it breaks those lows as well, retests this area, and then a close above that. If that happens, definitely a sharp long in this area, in this pair. So that's also interesting to watch how price is going to react to those key levels. So yeah, that's it for the USD JPY. Again, this level up here, but it's still very far away. I expect at some point this level definitely to break and hold. One thing, again, another tip, a lot of people think that the more often a level gets hit, the stronger it is. Now, that's usually not true, because the more often a level gets hit and doesn't break, the more liquidity is being generated below that level or above that level, which means it is a level that price tends to break to see how liquidity is going to get triggered and if there's any type of absorption there. So this is a level that has been touched many times in this area. So you can expect price to definitely break it at some point. If you get acceptance here, then target this upper level. But I do definitely expect this lower level to go and basically break and then look for an entry there. USD Canadian, nothing really there for the moment in terms of recent levels close to price action. We do have these unbroken highs in this area, so you can expect some liquidity to be there. Maybe you want to highlight that level, but the most important two levels are definitely these two and this blue box. And again, you've got this range, accumulation range, false break to the downside, breakout to the upside. This is the last bit of structure price made before the aggressive move to the upside. There's a key swing low here. So you can expect price to retest this area, take out the swing low, maybe form a bit of a base and then go up again. If I get my setup at this area, I will definitely be long because this is just a great area. It's below these swing lows. So you can expect liquidity to be here. It's at the origin of the up move. So it's just the best area to look for a trade, in my opinion. So this is definitely a level you want to put on your chart and you want to see how price reacts there. If we get a bit of a V here, I would look for longs, only short term, because this is a key level in the way of the market. So I would definitely be looking to take profits before this level. But the best area to go long, in my opinion, is definitely this blue box. Let's go to the next pair. After this, we have one more pair. Then I'm diving into some indices and gold. And also, if you already have questions, put them in the chat. And at the end, I will answer those as well during the Q&A. So key levels in the Aussie, nothing really recent next to recent price action. Obviously, this is a key swing point. Obviously, this is one. And these other two are also important ones, especially the most recent one, again, because of this double top area. So you can expect liquidity to be there. But as you can see, price has been ranging quite a lot. Now, if we get something like that, then I would be slightly bullish, but there's nothing really clear there yet. So if this happens, the next area of interest where liquidity will be is above the range. So like I said in the beginning, liquidity is above swing points, above ranges, below swing points, and below ranges. This is a key example of a range. This is where you can expect liquidity. This is the lowest end of the range. So that's where you want to see a false breakout. And also this low hasn't been broken yet. And this one also hasn't been broken yet. So anywhere in this area, you can expect a lot of stop losses and a lot of selling. So this is a great place for the market to go to, and bigger players can use that area to go long. So if this happens here, I will be looking for a long targeting that area. But in the lower time frames, there's nothing there yet because of this resting liquidity below market. Let me quickly get a drink. All right, GBP, JPY, also a heavily traded pair, and it's around the same as the GBP USD. This, I marked it out with an X. It broke two key swing points on the daily time frame. It looks like it didn't break it, but it's just a small break, and usually that's enough. It doesn't have to be something like this. A small break is usually already enough. So a bullish bias on GBP, JPY. Next area of vulnerability, next area of liquidity is definitely this area because of these unbroken highs. So that's 1, 2, 3. So the play I would be looking for here is a retracement down and then targeting that area of liquidity. So if we zoom into the hourly, let's see. So this is the false breakout on a daily time frame, giving me the bullish bias. And then again, you see this impulse move to the upside, and usually those get retraced. And also, if you look at the recent price action, you see these this triple top actually. And then you see two decent swing lows below market that haven't been broken yet. So I expect the coming days price to move down, break these lows, and then I would be looking for longs at this area, potentially targeting the first levels of structure, but definitely this daily level over here is definitely a great target because of these touches and because of the liquidity. So anywhere in this blue box area, I would be looking for longs and for my setup. So depending on how you trade, you definitely want to put this level in your chart. So let's take a look at some indices because some people requested indices as well. I do trade them as well. I actually noticed around a month ago that my strategy works way better on indices. So I am definitely trading those more. But in terms of indices, especially the major ones, so the S&P, the NASDAQ, they have a bullish bias. And what I mean by that is they reflect the biggest companies, usually, if you go for the main ones, of a certain area. In this case, the best tech companies in America. And they highlight economic growth and they highlight confidence in the economy. And the economy is designed to keep growing. So you have this bullish skew there. Doesn't mean you can get these big drops. So what I tend to do when I trade indices, the major ones, I look for bullish setups. I don't short those indices. Again, you can do, as you can see, there are sometimes opportunities there, but I like to just play the bullish bias and look for longs at key areas. Key area, of course, is this swing point below market. If we get this V over here, definitely would be looking for longs to target this high of the range. Yeah, so to the upside, there is not really a key level there on the hourly time frame. Also no key level, but that's how I play indices. As you can see here, it just barely broke this, but it's a decent swing point. you get this false break, move to the upside. And that's what I'm looking for at this area as well. So that's how I would play the NASDAQ. Again, on the hourly time frame, nothing really clear there. S&P, also heavily traded, also an index, an indice. I look for bullish setups on false breaks or retracement. And as you can see, they don't really happen that often, especially during this recovery from the Corona dip we had back in March. You can see price just is going up and up and up. And it's also because of the money printing, of course, and the investing into these companies. But still, there are some things to note down, and it's definitely this key level. This is what I want to see. And I've also highlighted that X over there, which is a false break of a low of the range. So you got this ranging action. This is the lowest end of the range. This is an unbroken low in the range. And then on this particular day, the low goes, this level goes, and we get this clean break and very strong bullish close. So if that happens, also, I'm also looking for longs. I expect something like that to happen at key swing points. However, I don't expect price to come here soon, if even it gets there. But this is definitely also an interesting area. So let's say price drops here, you get this sharp V. I will be looking for longs to target a new high. So this is a key area you want to highlight, and that one as well. US 30 also heavily traded, also a main index that is pretty important. As for right now, as for key levels, this is a decent level you want to look for. And this is exactly what I want to look for in these indexes, in these indices. So key swing point, price going into it, bullish, engulfing there. So it doesn't have to be engulfing. It also can be strong rejection like we had here. But that's the main idea you want to look for in these areas. So again, if this happens, definitely look for longs, because you want, that's just how you want to play these. There is a bullish bias. So you want to buy at areas below market that are significant and that have liquidity. And that's this area right now. In terms of hourly levels, because I know a lot of people trade intraday, there isn't really that much there. If you look here, there is a bit of structure there. You got these touches. So you can look for something like that to happen over here. You also can highlight, there we go, this area, and why. It's because this area is the last bit of structure before this massive up move. So if price retraces and takes out these equal lows where liquidity is, you can also expect this area to be retested. So this is definitely an area you want to highlight as well, and to look for longs at. Gold is also heavily traded in TradingNut. Got a lot of requests for gold analysis. Key levels in gold, very, very simple. These two white lines, because of this double top above market. This one is also important. This created the down move. This red level is, in my opinion, really, really key because of this perfect double bottom. And then this week we got another touch, but again didn't break. And you also get these areas that haven't been broken yet. So the best thing that could happen in gold, in my opinion, would be this. If this happens, I would definitely look for longs and longer term longs. I would definitely look for an entry here to even target this high, because of these touches, and because this is such an important level where there will be most likely a lot of liquidity. So that would be the play on gold. If you go to the hourly time frame and look at recent price action, look at the structure we had and look at how it broke. look at the touches in this area. This is a massive, massive structure. And as I spoke about earlier, markets break and retest. So zones break and retest. If I zoom in, so this is a key area. Oops. Yes. So if we zoom in, this is the last bit of structure price made before falling down. This is a clean move that usually gets retraced. So I definitely expect some kind of selling over here. Definitely expect something. So this is what you want to highlight as well. Again, I'm not going to trade that because of liquidity below market. So I rather be buying below here than to be shorting up here. But this is a key level you definitely want to highlight. And if it fits with your strategy, you can definitely look for shorts at this area because it's a very strong level. Look at all the touches, a clean fall that often gets retraced, and the last bit of structure. So key level and goal you want to look at. But in terms of longer term picture, I want to buy below here. I want to short above here. And that's how I'm going to play it. Silver as well. Some people ask for it. I personally don't actively trade silver, but I do invest in it for the longer term because I definitely have a bullish view. Target of me is around $50. As you can see, we're now at 23. Big target, but it's a long-term play of mine. Key areas in silver. Definitely this swing high. As you can see, it broke this important one close above. Again, you can see how key these areas are. So yeah, this was also an important level because of these touches over here. And as you can see on this day, we broke this area and we are now moving back into it. Do I look for shorts? No. I prefer to see a V shape here, and I do actually expect that area to go. However, in the short term, I am expecting a move up. So I'm expecting this to happen and maybe retest this area. So if there's a clean break above this level, this key level, I would be looking for something like that if I were going to trade this area. And then for a long to target key areas above the market. But the most interesting ones I'm looking at right now are these two key lows below market. So a V return over there. Let me grab my pencil. And of course, this key area here, because this is the last bit of structure before we had to break out to the upside. So these are all the key levels I highlighted in the charts. Again, if there's something we missed, please leave a comment down below and ask your questions, because next time we can cover those as well. So that's basically the pre-market analysis for right now.
Awesome. Brilliant stuff, Cass. Now, there's a bunch of questions that have been popping in throughout the presentation. So the first one is way back on Euro US dollar, where somebody asked, why wouldn't you take advantage of, or didn't you take advantage of the big retracement that I think you highlighted on the hourly, possibly on the hourly chart?
Let's see.
Yeah, I think it was on the hourly chart. You talked about the fact that you expect it to come back and retrace from possibly that blue level there, and you're going to take buys when it gets closer to the bottom. It's like, well, why wouldn't the question is, why wouldn't you take advantage, or why don't you take advantage of that retracement, given the fact that there's obviously money to be made there?
Yeah, personally, that's not my approach to these levels. Of course, you can trade it that way. But my approach is really, I look for the liquidity at the key areas, so at the key daily ones. Of course, you can trade it at that area, but I prefer myself not to. I find that if I keep trading at these key areas, it increases my performance. But if I really just try to catch every retracement there is, usually harms my performance. So that's why.
There's another strange question here. The main question for this person is his name's Scaled Up FX. I wish to go full margin with 3,000 to 1 leverage next week. Which setup is Cass's favourite for me to pile on my cash in?
Oh, damn, that's a great question. Well, let's take the question seriously. So let's say I want to only take one trade at one key area. The best area I would be looking at is, well, for next week. Damn, that's a hard one to answer. Because most of the levels are quite far away from market yet. So, well, if it's the week after or 2 weeks after, this blue level would be the main area. So if you want to go full margin, which you shouldn't do, of course, that would be the best area to do so.
And we've got another one here. So yeah, I think quite a few people wanted to see gold, and after the crash, it's been so confusing for the rest of the week. It took out buyers and sellers.
Yeah.
So I suppose you've really broken that down, which is great. Here's another question: in which session do you normally find fake outs on gold / euro US dollar? Which session?
Which session? I personally don't trade these areas intraday, so that's very hard to answer for me. But I do know that a lot of people look for these fake outs to happen during London because that's the most heavily traded, and especially in the crossover with the US session. So that's maybe something you want to test out. Let's say you have a strategy where you want to look for fake outs. Just note down at what time they happen. And if you notice a pattern there, you can work from there. But I don't usually look at these sessions as well. So
another question from the same person. What are your best entry setups?
my best entry setups at these key swing points. So the levels I've highlighted, I look for ranges to happen, and I look for a false breakout and then a clean break above a range. That's my entry trigger. And that's always what I look for at any key area. So let's say we get something like that up here. That would be my trigger to go short. And if it's below market for a buy, this would be what I'm looking for.
And a question from me. So that's all the questions in the chat. The question from me was, so silver. Why are you long term biased for silver?
Well, it comes back to Wyckoff accumulation. That's what I use with investing. And I don't think this data from this demo account goes back far enough, but basically on the weekly time frame, we had this massive accumulation range. And this sweep the low of the entire range. So that gives me a very bullish bias, and also because of fundamentals going on and people talking about the US dollar printing and printing and printing. And also if I look at the entire commodity index, the same thing is happening, basically a massive accumulation range and a move up. So yeah, for the coming years, I'm definitely bullish on this based on those fundamentals and because of the accumulation range in silver. Same goes for platinum. And with platinum, there were also big issues with the mining. So supply is definitely decreasing there. And that's because of supply decreasing, you can expect prices to rise. And because it lines up with the accumulation, same in silver, I'm definitely bullish on those.
Cool. Awesome. Hey, look, now, were you going to review the week before as well, or we sort of
well, the way I want to approach it is to just talk about the key levels before. So let's say in next week's session and things happen at these areas, I definitely want to speak about these things. But for now, I want to keep it with this.
With the forward looking. Cool. Well, look, guys, this has been very, very insightful. Something I haven't actually seen before in terms of anyone offering this up. So, Cass, this has been really, really good. I'm sort of looking at this thinking there's some stuff in here that I can actually use myself going into next week. Now, guys, we're going to be doing this every week. Maybe not myself, but definitely Cass here on the channel. And if you guys want to get access to it, it is a paid service on Trading Up. So it's a new paid service on Trading Up. You can get access to it by the link underneath this video. There should be a join button somewhere if you're just on another part of the site. Click on that. You're going to see my mug here, and then you're going to get Cass going through in a little short 3-minute video explaining exactly what you get as part of this pre-market analysis. So this is a weekly thing, really geared to set you up for the trading week, so that you know, especially what he showed on gold today. I could sort of tell, okay, right, well, that gives me a bit of a plan for how I could approach that. And obviously, Cass is in the Trading Nut Telegram chat, so if you did want to sort of see how things progress during the week, you can always hit him up there. And yeah, obviously you're going to be looking at how the week played out in the past as well, so we can sort of see how these levels do hold. And over time, people are obviously going to start to love them even more. So yes, it is $24.99 US. A month. You can obviously cancel it anytime through YouTube. It is all done through the YouTube channel, so this content will be streamed live most of the time, and then when Cass can't do a live for whatever reason, he'll do a recorded session and upload it. So if you can't make the live, you can always get the replay or the recorded session and watch that at your leisure before the market starts, or like one day into the week or 2 days into the week, if that's going to help you with finding these levels. So yeah, thank you very much, Cass.
Yes.
Anything else from you before you wrap up?
Yeah, one thing. I noticed not a lot of people ask questions, but in the future, I think it's definitely a good thing to ask questions. So you basically get like some coaching in there as well. So you pay for the Q&A, the pre-market sessions. Why not take advantage of the Q&A? If there's something you're struggling with in your trading, maybe you have emotional issues, maybe you don't know how to backtest, just ask those questions, because I will definitely be able to answer those. And that way you can even get more value out of these sessions. So that's a quick tip right there. And yeah, I hope everyone enjoyed it, and hopefully see you in the next session.
Well, there are a couple of other questions here.
Oh, sure.
Do you take fundamental into account when you're doing your analysis? If you do, which news do you look at?
No, I don't. That's a quick answer. I don't look at fundamentals at all. And that's basically because I swing trade at these levels. And I've also find that usually if you look at these key areas of liquidity, news kind of moves in your favor, if you know what I mean. And usually news is also already priced into the markets. Another thing, I get this question quite often about trading fundamentals and trading news. You have to realize that us as retail traders, we get the news last. So you're basically one step behind everyone else. So yes, you can take a look at fundamentals to look at when volatility comes in and maybe build a bigger picture in terms of fundamentals in the longer term. But for trading these levels, I definitely don't look at it. No.
Cool. Awesome. Hey, well, look, guys, you know where to go if you do want to get this stuff in real time going forward on a weekly basis to help with your trading. I know a lot of people in the Trading Nut Telegram chat were sort of wanting this kind of information. So hopefully you found this session useful. And if you do want to join, there's a link below the video that'll take you to this area of the Trading Nut site where you can, Trading Nut channel, where you can actually join this. All right, Cass. Well, look, thank you very much. This was an awesome session. Hopefully you guys, if anything, learnt something new about the markets. I did. And yeah, we'll see you in Trading Nut later on this week.